This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. We are already looking ahead to a week in August, the first week in August. I can't believe that. August 3rd through the 7th is what this earnings preview is for. Charles Rotblood, our senior market analyst here, again to enlighten us on some of the goings-on in this week. Man, August already. Where did this summer go?
I know. I need to go shopping for my wife's birthday present. Time's running short.
Then what are you sitting here for?
I don't know. Excuse me.
All right, earnings-wise, I'll get you out of here real quick. Earnings-wise, 870 companies reporting in this current week. What do you think? Do you think the upside earnings surprises look firm enough to support some more third quarter optimism?
You know, we'll see. I mean, this will really be the last big week in terms of having mega companies report. I mean, we still have some coming out. I don't want to confuse people. We have like Hewlett-Packard hasn't reported, Walmart, Home Depot, but by and large, as we record this, we've already had over 300 companies S&P 500 report. By the time we get to August 7th at market close, we will have had 4/5 of the S&P 500 report. So most of your major reports will have already come out. So we're really looking at a tailwind that's going to be dissipating in terms of propelling the market higher. This is coming at the same time the S&P 500 is dealing with resistance. The November 4th close was 1,005.75 to be detailed. And so you're looking at that, and you're really looking at those two things. So, okay, you're hitting resistance, we're overbought, and we're looking at some of the tailwind kind of fading away. So it is questionable as to what's going to happen. We do have a few things down the pipeline. We have a two-day meeting for the Fed on August 11th and 12th. Right. Obviously, we're looking for possibly some economic data to start getting better and maybe even showing signs of expansion. But I do think it's questionable, and we are nearing a point where it would make sense for the market to pause. However, momentum has been favoring the bulls right now, and I think it's really hard to say, okay, the rally's ending now, although certainly there could be a case made for it. If I had to really go on a limb and say, if you said, Charles, give me an answer, I would say, yeah, I think we're near the end of the rally, but I wouldn't necessarily put a short position on it because, like I said, the momentum's still favoring more upside.
Well, you've been talking about a sideways market for a while now.
Right, and it's just a question of what that upper band's going to be. And if we don't make a firm breakout above that 1,005 mark, that could be a firm line of resistance and really a tough area to get through.
What'd you think of that last Treasury auction?
You know, it's interesting. The 7-year auction actually got some very good demand, and we had a record amount of Treasuries offered this week, and we could not kill the Treasury. The yields are holding steady, prices are holding steady. I don't know what it's going to take to get yields to jump, but at some point they will. But, you know, it's a question as to when. Certainly record supply didn't do the trick.
And those GDP numbers?
GDP numbers came in pretty good. We had a 1% decline, much better than a lot of economists had thought. I had a hunch yesterday that it would come in at 1%. I should have put it in writing.
You should have.
Everyone could have said, aha, that guy's right. But, you know, it's good, and it really cements what we've been seeing from much of the other economic data. The pace of contraction is slowing. So obviously the next step is we need to see a positive number for GDP. Maybe not the third quarter. We'll see how the numbers shake out. But we are moving towards a bottoming economy, and it's definitely in a bottoming phase. The question is, how long will it take before we actually get to the other side of the hole we're in and actually crawl out of it? I really think we're looking at a situation where the first 2 years of the Obama administration is going to be marked by an economy that just didn't grow. And it's not a political statement. It's just the reality and the mess that he walked into or had John McCain walked into. I don't think it would have been much different. We're in a huge hole. We're looking at a very slow pace of recovery coming out of it.
I'm seeing predictions on the wire for an 11% retracement in the second half of this year in the stock market. What do you think of that?
You know, it's possible. I think, again, it comes down to that trading range and what's going to be the higher limit and what's going to be the lower limit. If we see a 10% pullback, that wouldn't be surprising at all. Given the run we've had, it would put the market in a trading range. So I don't think that's not to be expected. Stocks never go in one direction or the other, even when there's a clearly trading market as a bull market or a down market. So I think someone saying there's going to be a 10% retracement or 11% retracement, yeah, that's going to happen. It's not a question of if, it's a matter of when, but That's pretty normal for regular market activity, even when economic conditions are good. We do get pullbacks from that. So if that happens, I think it would be a decent buying opportunity. But I certainly don't think anyone should be scared, because especially right now, it is all fast money moving the markets. And if we actually look at the activity from Thursday, July 29th, all the market movement occurred in the first half hour of trading or the last hour of trading. During the middle part of the day, when most people probably would have gotten involved, stocks were pretty flat. So it really does show momentum traders moving stocks in one direction or another.
Quickly, the big economic number this week is going to come out on Friday, July unemployment.
Yeah, we'll have July unemployment. I think we'll see the unemployment rate continue to rise. We're expecting a drop in non-farm payrolls relative to what we saw in June. We'll see what the June numbers revised to, but you know, again, the labor market's going to be lagging. I don't expect anybody's looking for, you know, signs of real improvement in there, but really for the labor market, we're looking for some sense of stabilization, that maybe we're getting near the end of these job cuts. But the labor market's going to remain weak for a while, and we will see unemployment continue to rise even as we start seeing non-farm payrolls, the cuts in non-farm payrolls, continue to drop.
All right, there are stocks that could surprise to the upside in this current reporting week, and at least one that Charles mentions that could surprise to the downside. And when I took a look at it, of course, it's no surprise to me, but I'm familiar with this company, so I'll let you check it out in text form on Zacks.com's webpage. You scroll down the webpage on the homepage until you get to Charles' picture and click on that headline right next to it under the earnings preview banner. With Charles, I'm Terry Ruffalo.